Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with SilverDoctors.com for your SD Weekly Metals and Markets Wrap. And our special guest today is President of Sprott U.S. Holdings, Rick Rule. Rick, thank you so much for joining us today.
Pleasure for being with you. Thank you for having me on.
All right. Now, the first topic we need to address today is the growing tensions between the U.S. and Russia we've seen this week after the tragic events in Syria. Now, what is your perspective on the growing tensions and how this will impact markets?
I'm not sure on either topic. It seems like there are a number of places with the potential for conflict between the United States and Russia, and I can only hope as an old man that neither side takes the opportunity to make things worse. My suspicion is that if the rest of the question goes to its impact on metals prices, precious metals prices in particular, that precious metals prices were headed higher anyway. And investors use the narrative around tensions between the United States and Russia as an excuse to compel them to do something that they were going to do otherwise. In other words, I think it's interesting from a metals prices point of view, but not particularly relevant. I think that the precious metals were headed higher as a consequence of perceived weakness in the U.S. dollar, and that investors use the geopolitical tension narrative as an excuse to do something that they were going to do anyway.
Hey Rick, I'm not sure. Do you pay much, if you pay much attention to it? But the speculators in silver on the COMEX now are at record levels. That they're short now. They've usually been on the long side for decades plus, but they are short now. I wonder if you have any insight into what's going on there.
I have a guess, okay, which is not the same as an insight.
Sure.
The physical silver market is awash in retail supply, small denominations, and I can think of two things that might have changed. One is simply that the silver speculator is a classic manic depressive, and the slow-moving nature of the gold trade, which usually drives the silver trade, I think bored silver speculators through 2017. And I think that many of the silver speculators defected, perhaps temporarily, to faster-moving cryptos. I think ironically, the fact that Bitcoin, as an example, advanced from $400 to $20,000, in the process of which becoming at least arithmetically 25 times less attractive. But I think that momentum probably took a lot of the wilder silver speculators out of the silver market. What we're seeing in the silver market is the incredible buildup of retail inventory in the system, even as investment and institutional demand for silver and industrial demand for silver has stayed fairly strong. So it seems very likely that the sort of depression that's felt in the ranks of retail silver speculators would have translated into a short position on the COMEX. Of course, ironically, I always believe that short positions are bullish. What a short position is a buy that has to come into the market. It's a fight between the longs and the shorts as to what price that trade settles at. But the fact is that what you see on the silver on the COMEX in terms of the silver short is latent buying.
I'd love to know if you'd expand on that a little bit, Rick. Do you see that the current unusual short position by the large speculators as being something that can be extrapolated on when it comes to sentiment and where we are in the market cycle when it comes to silver?
I don't know where we are in the market cycle. I really don't. We are seeing increasing industrial utilization of silver, which will continue when the silver price stays low. There is enormous utility in silver, and new uses for it are being evolved currently, partially as a function of the fact that it's very cheap relative to its utility in industrial applications. So from an industrial point of view, certainly the market is extremely strong. We also at Sprott are seeing strong institutional interest in our physical silver products, but a lack of retail interest. I can't talk to the aspirations of the people who are short on the COMEX. All I can note is that eventually they'll have to buy in their positions. What you find for people who are in a short position is that they act very, very quickly. And to the extent that there was some strength in the silver market, shorts tend to cover very rapidly if there is impetus to do it. Although I've been short many times in my own life, whenever I've been short, I have understood the negative arithmetic around being short. You may believe that there's a high probability if you're right, but the upside if you're right is, of course, 100%. And the downside if you're wrong is infinite. It's a lousy aggregation of risk to reward. So if a position tends to go against you, particularly because you're paying often a margin carry to be short, you turn into a very motivated buyer very quickly.
Now, Rick, I'd like to circle back a bit. You were talking about how the geopolitical tensions will probably just be an excuse for investors to do what they already were going to do in the first place, purchase more gold and have gold rise. Now, it seems like since January, though, we haven't really seen, gold has been up and down, but really we haven't increased that much. So are you saying that there's actually a trend change developing and we're going to see gold go higher?
Well, I think that depends on your perception, really. If you look at gold relative to almost every other asset class, it's done extraordinarily well since the beginning of the year. I think that some gold speculators had their aspirations set in the 1970s when the gold price went from $35 an ounce to $850 an ounce. I have a different set of aspirations. I own gold personally as insurance. And for me, gold has done an admirable job of protecting my purchasing power. And it's done an admirable job of protecting my purchasing power for a very long time. So in terms of my view towards the gold trade, I think that gold's done an extraordinarily good job in periods of time when other asset classes, I don't think, have done as good a job at protecting my purchasing power. I think your comments on the market are ones that people need to take into account their own perceptions on. Certainly, if you compare gold to any prevalent asset class, except ironically, maybe in the very near term, the U.S. Treasury, which has paradoxically been strong at the same time that gold has been strong, confounding me, and perhaps emerging market securities, which have rebounded after really, really getting trounced 3 or 4 years ago. Gold's done an extraordinary job, I think.
Rick, you made a mention about Treasury market and what it's doing. I'd love to get your assessment on the credit market and economics and how that's going to shape gold going forward. The market, presumably, we're going to see Treasuries move higher in interest rates as the Federal Reserve continues to try to normalize its balance sheet. Do you think they're going to be able to pull it off? And how do you see all of this intersecting and shaping precious metals in the next year or so, or 2 years?
I wish I knew the answer to that. I'd feel a lot more confident, and frankly, I'd feel the need to own a little less gold if I had a clear view myself as to how the circumstance will resolve itself. I think it's pretty easy to suggest that the long-term bull market in the U.S. Treasury, which began, of course, in late 1981, early 1982, is over. The interest rate on the 10, as my memory serves me, fell from 15.6 to a low of 1.3. At its current level, one could argue, in fact, that the Treasury market topped out and has begun to decline, or if it hasn't, certainly a decline in the bond and a raise in interest rates is imminent. If you believe, as I do, that the most important part of the gold story in the last 40 years has been faith or lack of faith in the U.S. dollar, but particularly the U.S. dollar as expressed by the 10-year interest rate, that's my belief, then certainly the fact that we're at the end of the bull market in treasuries should mean that we are at the beginnings of a bull market in gold. Now, the relationship isn't perfect, but it's my belief that the most important determinant in the gold price has been, in sequence, faith or lack of faith in fiat currencies as expressed by sovereign gilt debt. More importantly, the U.S. dollar as a fiat currency expressed by the U.S. 10-year Treasury, which is the single most important asset class on the planet. And third, whether or not that relationship between gold and faith in fiats continues into the future, which I personally believe it will.
So, Rick, looking out into the 2020s, what asset class are you looking forward to and are most bullish about at the moment in the resource sector? What specific resource at the moment has got your eye?
Well, certainly for investors who don't own gold as an insurance class, given what I see as a dangerous debt market looking forward, you start with gold. In other words, you try and preserve your purchasing power before you worry about increasing it.
Sure.
And I think in terms of resource equities, the easiest way to make money in the very near term, 2018, 2019, is probably precious metals equities. I personally tend towards the smaller precious metals equities because I believe that information regarding them isn't well distributed or well understood. I think I can outcompete fellow speculators much more easily on a $200 million market cap than I can on a $15 billion market cap. But that might be something that your listeners should not try to attempt at home. I spend full time doing this.
Sure.
Getting back to your original question, though, I try and be in assets that other people are not in, asset classes that other people aren't in. So I continue to be attracted to water, as an example. Mm-hmm. I'm attracted to very high quality U.S. farmland that has water rights attached to it, not where they get their water by way of welfare from the government, but rather by way of water rights that are tied to the land. I continue to be attracted to agricultural minerals because everybody else I know hates them. It isn't that they're bored of them, they hate them. And hatred has always been a mark to me that an asset class is one that offers a lot of upside without too much competition for other investors' dollars. I continue to be attracted to the uranium business, although I can't tell you when that's going to work for me. I think that'll be a function of the pace of Japanese restarts. But as I've told you in earlier interviews, I think I'm attracted to investment questions where the answer has to begin with when, rather than if. Many people, because they don't have conviction about the information that they're using to make an investment decision, get terrified about the timing of being right. They tend to have trauma holding stock over a long weekend, What I've found is that if I can find a circumstance where I will certainly be right in 2 or 3 years, that's a better bet for me than one where there is a very strong possibility or even a probability that I won't be right at all. As I say, I've really learned to prefer questions where the answer begins with when. And you get to ask yourself those questions by confining yourself to investment areas, in commodities at least, where the selling price of the commodity is less than the total cost of production. It's counterintuitive that you would buy an industry in liquidation, but what happens when you buy an industry in liquidation is that at least where the commodity is essential for the future of mankind, you have one or two choices. Either the price goes up or the way we live changes dramatically. So look back 18 months ago. The price of oil was at $45 a barrel. And the statist geniuses, like at The Economist magazine, of course, said that the price was going to go to 10. Now, think about that. On a global basis, it cost us $60 to make a barrel of oil, including prior year write-downs and the cost of capital. So you make it for 60, you sell it for 45. You lose $15 a barrel times over 100 million barrels a day. The industry is losing $1.5 billion a day. Eventually, that gets fairly tiring. Right. You have two choices. Either the price of oil goes up or your car doesn't start in 5 years. Which of those do you feel is more likely? Okay. So from my viewpoint, I try and look at asset classes that are essential to the future of mankind, that are priced below the cost of production, and I try and buy the best companies in the space that I can. Ironically, the worst ones are the ones that do the best when it returns to favor, but I don't have the guts to buy the worst. I want to buy the best.
All right.
Now, as for emerging markets, are there any in particular that you are investing in?
Oh, sad to say, yes. I'll be punished for my sins, of course, but I've increased my investments in Russia in the last week. Some of the finest companies in the world, resource companies in the world, and also financial services companies in the world are in Russia. And Russia has one of the finest endowments of intellectual capital, people in the world. The fact that I can buy these companies in an economy that is actually improving fairly rapidly, as a consequence of a personality disorder of the leaders of both countries, to me is a great benefit. When, and I think the question unfortunately is when rather than if, Congo slips into a civil war, and when the nightly news is dominated by headlines of massacres and mass rapes, I'll probably increase my positions in the Congo, too. It isn't that I'm a fan of either mass rape or murder. It's a function of the fact that assets in the ground seldom care about the stupidity of the people on top of the ground. And when those circumstances change, the value of the assets changes fairly dramatically. I'm in a wonderful position now, being a fairly old guy who was lucky early in his career, that I have amounts of money that I can speculate with, that were I to lose 100% of them, it wouldn't change my decision as to have for breakfast, what to have for breakfast. So I'm not suggesting that a young person with limited financial means puts 100% of his or her net worth into Congolese speculations in anticipation of civil war. But when you ask about what appeals to me, the last time, as an example, that Russia was in its current circumstance, investments I made in Russian securities appreciated 100% over 2 years, which was certainly pleasant. And the last time I speculated in Congo during the civil war in the mid-90s, my worst Congolese speculation was up tenfold over 5 years. So anomalous circumstances like that, where extraordinary assets that I understand become available at generational low prices, Those opportunities are ones that I just can't resist trying to take advantage of.
Recently, we've seen a lot of trade friction developing between the United States and China, and we have the context of Russia being more of a geopolitical source of conflict and competition against the United States and our allies. And there's a question of what will be the long-term evolution for the yuan currency as a reserve currency and how that relates to the petrodollar. Do you believe that the recent listing of the petro contracts denominated in yuan settlement is a significant development? And how do you see China over the long term when it comes to its threat to the petrodollar standard?
I think as long as the Chinese domestic savings rate stays as strong as it is, that China will continue to outcompete the United States. That's counterbalanced by the fact that the United States has a very, very transparent economy and the Chinese have a very opaque economy. Their savings rate is extraordinarily bullish. Our savings rate is extraordinarily bearish. On the other hand, the opacity of that economy and the fact that 10,000 people try and make decisions on behalf of 1.2 billion people is a strong, strong negative. My suspicion is that the ingenuity and the hard work and the predisposition to education of the Chinese people will overcome the stupidity of their leadership, and that the country will continue to do well. And as a consequence of that, the yuan will strengthen relative to the dollar over 20 years. But this is a suspicion. Remember, I'm a credit analyst. I'm not really good at mass psychology. With regards to the trade dispute, I think it's sad. Trade wars make everyone poorer. The correct trade relationship between two countries could be written on one piece of paper, which says there shall be no barriers whatsoever to free trade between free people. People should be able to buy from and sell to whoever they want with no restrictions whatsoever. That's a really boring document for leaders whose whole sort of sense of self-worth is interfering with the rights of individuals. But I really, truly think the trade war, irrespective of how you justify it, is both tragic and stupid.
All right. Well, Rick Rule, thank you so much for joining us today. Before we let you go, did you have any last thoughts you'd like to add, and where people can find you online?
Sure. I have two last thoughts. Thank you for the opportunity for commercials. The first is that people who care about silver would be well advised to come to the Sprott Vancouver Natural Resources Symposium, July 17th through 20th, where, among other things, I and the Silver Institute will do a silver market symposium discussing all aspects that we can of the silver market. The second is that I always enjoy interacting with your listeners and subscribers, and I extend once again the offer to review any natural resource equities portfolios that your subscribers would like to send to me. Put the name and the symbol of the company in the text so that an old man can respond easily. I will rank them and return them to you under no obligation. Send them to rrule, that's RRULE at sprottglobal.com, and I welcome the submissions.
All right. Once again, thank you so much for your time today.
Gentlemen, thank you.
All right. Great. Thank you so much.
Thank you.